All right, Max Sanchez, welcome to the TEACHMEDEFI podcast.
The Bitcoin community has evolved a lot. You still have the same Bitcoin community that was there, back in 2011, 2012, 2013. But there's now this new Bitcoin moderate who likes a lot of what Bitcoin does, what Bitcoin stands for, but also they don't see Bitcoin and Ethereum as competing. They see them as solving different problems.
What's Hemi? How does it work? What are you doing?
There was never really a way to program your Bitcoin before. So what we set out to do with Hemi was take the architecture that allows Ethereum L2s to function very securely, and then basically add in connectivity to Bitcoin. And so we took the best parts of Bitcoin, the best parts of Ethereum, we basically combined them together in a single protocol that speaks both languages.
Hey, Sohail here. Thanks for tuning in. Real quick before we begin, if you enjoyed this episode, if you learned something, please consider to follow or subscribe or share this episode. That helps us out a lot. It helps us to reach more people and to spread quality education across the space about crypto and Web3. Also, if you're part of a crypto project or represent one and you would like to come on the show or do sponsoring, please get in touch with us. And lastly, everything we talk about today is for educational purposes and no financial advice. Enjoy the show. All right, Max Sanchez, welcome to the TEACHMEDEFI podcast.
Awesome. Thanks for having me. Looking forward to this.
Yeah, same. I obviously read up on you guys and it's some interesting stuff. It's not like your usual kind of crypto project or protocol. It's quite specific around connecting Bitcoin and Ethereum in a way, also benefiting from the security, I believe, that the Bitcoin network inherently has. So I'm curious to dive into all this. What's sort of like your background actually? Because I think there's some interesting things as well. You've developed like a specific consensus protocol. So what's your background and what draws you to Bitcoin specifically, I guess?
Yeah, for sure. So I first got into Bitcoin like late 2011, early 2012. I was into computer science programming. I also found economics fascinating. And so when I came across Bitcoin, it's just kind of the perfect combination of those two in a way that was interesting. It was cutting edge. It was a very small community back then, I don't know if close-knit's the word, but it was very easy to just like jump into it, engage. They're looking for new people, very welcoming. And jumped into Bitcoin for the first, 2-3 years was mostly just kind of an outside observer, understanding how the technology worked and, thinking through, cool ways that it might be used in the future. And this was like when you started seeing all the little altcoin shoot-offs of Bitcoin come out, and you had, your Litecoin and your Devcoin and Namecoin and all that. And so I found that interesting. And it was kind of like a way to be early to a project. Like obviously it was still early to Bitcoin, but it was, you could get in on day one on new projects that were trying some new innovation, or just maybe some of them were just a branding exercise. But so got involved in the altcoin space, did a lot of mining, and then did some work on like small projects, small personal pet projects, trying to build like more optimized GPU miners and things like that. And then eventually in 2015, I started a project called Veriblock, where the goal was to use Bitcoin security as a way to secure other chains. And so the concept of doing that wasn't exactly a new idea, because you had projects like Namecoin way back in the day who implemented something called merge mining, or aux POW, which is one way to inherit Bitcoin security, but it has some very serious drawbacks because you're basically handing over control of the protocol to the Bitcoin miners themselves, and you need to get the Bitcoin miners to adopt your protocol. And there's a way that they can attack your protocol while mining Bitcoin normally. So people were already thinking in that space, but the existing solutions weren't getting the job done and weren't, truly providing Bitcoin level security directly to chains. And so in 2015, co-founded a company called Veriblock, where we created the proof of proof protocol, the POP protocol, which was a new decentralized way of inheriting Bitcoin security, without needing Bitcoin miners to participate, without needing to basically give control of your chain over to Bitcoin miners. It was a way to basically incentivize the community to publish, fingerprints of your chain to Bitcoin in a way that could be used for consensus and fork resolution. And so started that in 2015. We eventually launched that in 2019. So worked on that project for years and years. And then one of the early investors in that company was Block, who is now sort of the parent company behind that spun out Hemi Labs. And so at some point in, I want to say close to 3 years ago, we said, why don't we take that proof of proof technology from the Veriblock project, and why don't we bring that over to the Ethereum world? Why don't we integrate that in some way into either, what started as an Ethereum L1 and then quickly turned into, or an Ethereum-based L1, and then that turned into a Ethereum L2, and then we added in a bunch of other Bitcoin orthogonal things beyond just Bitcoin security, and that's kind of the story of how we got to where we are today.
Oh wow! All right. What's sort of like your feeling about the Bitcoin ecosystem, or about how Bitcoin has evolved since you've been around for so long, and you worked in the altcoin space as well? There's a lot of strong opinions sometimes on on each other, in a way. The people who are, let's say, more involved in the altcoin space, and then Bitcoin Maxis and things like that. Where do you fall in all this? What's your view on where we are today?
Yeah, it's interesting. I mean, the community's definitely, the Bitcoin community has evolved a lot. It's you still have the same Bitcoin community that was there, back in 2011, 2012, 2013. But there's now this new like Bitcoin moderate who is somebody who, likes a lot of what Bitcoin does, what Bitcoin stands for, but also they use other DeFi protocols. They like Ethereum. They don't see, Bitcoin and Ethereum necessarily as competing. They see them as solving different problems. And so seeing that kind of, I don't know when exactly it started, but maybe 2017, 2018, a lot of new people were coming into the space. Bitcoin was exploding and then had a crash, as always happens, it seems. But you got a lot of new entrants who weren't, maybe they were brought into crypto through other projects and then, graduated in air quotes to Bitcoin, or they came in, they tried to build something on Bitcoin, and due to Bitcoin's limitations, they just couldn't make their protocol or whatever they were trying to build work, and so they ended up going over to Ethereum. And now
Yeah,
that we're between some changes we've seen in the Bitcoin protocol, with SegWit and Taproot and all that, and also just more innovation in the Ethereum ecosystem that people have figured out ways to translate over to Bitcoin in some way. I think we're seeing a lot of those people who maybe tried to build something on Bitcoin, it didn't quite work out. They went to Ethereum, and now those people are revisiting Bitcoin and seeing it as actually a place where maybe they can build their protocol or translate it in some way, which is exciting.
Mm. Okay, yeah, I think you're referring to this what feels like a bit of a wave towards Bitcoin again, with some different coloring, I guess. I mean, in a way, there's programmability coming there, or there's like different like L2s or side chains which extend the things you can do with Bitcoin. Also, the whole restaking thing, bringing the security of Bitcoin to other chains, or like I feel like it kind of started like in the more crypto mainstream to be talked about with EigenLayer and ETH restaking, and I think you guys are in a way bringing programmability to Bitcoin, or is that a wrong characterization?
Yeah, absolutely. So what we basically, if you look at the team composition, we have obviously, Jeff Garzik was one of the original Bitcoin core developers, worked right with Satoshi, so obviously understands the Bitcoin protocol very well, knows everything about Bitcoin's, not only the code, the tech side, but the community and how the protocol evolves socially. And we have myself, early to Bitcoin. Very much love proof of work and what Bitcoin stands for as a protocol. And a lot of other team members, similarly, who got started in Bitcoin very early on. Some of them started altcoins. Some of them were Bitcoin developers, or developed, platforms that integrated Bitcoin in some way. But we also have a lot of people with really deep EVM experience, building smart contracts for years on Ethereum and some other chains. And so kind of that mix. None of us are, maximalists in either direction. It's a matter of looking at both networks as tools that do different things and solve different problems. And so what we wanted to do with Hemi was take the best parts of both of those networks and combine them together in a cohesive way where we could expand Bitcoin's capabilities, we could expand Ethereum's capabilities, we could retain access to the liquidity and assets of both chains, and create sort of this cohesion, this middleware layer in between, in that white space between Bitcoin and Ethereum, because generally speaking, there was never really a way to program your Bitcoin before. Uh, and there's been different approaches that people have taken. There's one thing called Bitcoin Header Relay, which was a system on Ethereum that kind of tracked Bitcoin consensus, and so you could do a couple things with that. But nobody really, to this date, has tried to combine both networks together. Most of the approaches have been either, taking a technology from Ethereum and adapting it to Bitcoin in some way, but in doing so, losing the connectivity to Ethereum itself. And so that's the problem space we wanted to design in, is how do you actually combine these two together cohesively? And that comes down to Bitcoin programmability. How do you, given Bitcoin's limitations on the technical front with, the limitations of Bitcoin script, and there's only so many things Bitcoin script can do, and there's some limitations even with, the block time of 10 minutes as, matters in some instances. And so how can we take Bitcoin with its limitations as it exists today and expose it and integrate it into an EVM in a way that lets people develop basically the most Bitcoin native dApps possible without needing Bitcoin's protocol to make any changes, relying on opcat or whatever.
Okay, interesting. And I've seen some stats which we can get into later, which look like you got real good traction already with Hemi. Um, I think TVL was more than 1 billion. Is that correct?
Yep, I think we're 1.2 roughly right now.
Okay, okay. Um, but yeah, you also mentioned Jeff, so I think that's kind of interesting to dive into. Obviously, a huge technical OG in the space, I guess. Uh, any stories on, I don't know, working with Hal Finney or losing the keys to thousands of coins, the block size wars, whatever, anything like that? It must be interesting to work with someone like that.
It is absolutely, and we have a some content we put out a while ago called Satoshi Stories, which was some of that. It was going through like the OG Bitcoin development days and some of the, stories from how Satoshi, left the protocol to uh, some speculation as to who he is or why we maybe shouldn't even be speculating on that at all. And so yeah, definitely a lot of interesting stories. The block size war, I was heads down working on just this little tiny sliver of, Bitcoin security inheritance, and so I was, watching that from afar on the outside. But he was definitely involved in the uh, all the different proposals going on at the time, and a lot of the softer, community stuff. And the Bitcoin community, they're it's an interesting, it's an interesting community. You get a lot of characters, and so yeah, the it's funny when you look at Bitcoin, and this is part of what makes it great, is that, people are very, very conservative with changing the protocol, and so it's established this, trust over 15 years that, if you send Bitcoin and it gets confirmed, it's staying, and there's not going to be any breaks to the protocol that, messes up some way that you're using Bitcoin. It's always, the simplest of things take years and years of discussion and debates and lost friendships. It's a wild community. Whereas, Ethereum or some of the other chains, it's, you see breaking hard fork protocol upgrades 2-3 times a year. And I don't think there's a correct approach, but it definitely lets Bitcoin address a different group of very uh, conservative people financially who want to, if I put my Bitcoin in a, I hammer some letters and numbers into sheet metal and put it in my vault, in 40 years, I'm going to be able to take that out and everything's just going to work. And, it's definitely solving a different problem.
Yeah. It's good to have the optionality anyway, different approaches. And I guess you decided to be right in the middle of it, so that's also kind of funny. Yeah, then tell us a bit, like on a high level first, maybe like what's Hemi? How does it work? What are you doing?
So high level, you can think of Hemi as a Bitcoin and Ethereum L2. So most L2s, they anchor into basically or connect to one single chain. So Optimism is only an L2 to Ethereum, right? And there's ways that you can interoperate between those L2s and other ecosystems, but they're through third-party protocols that may introduce some trust models or some added complexity or risk or liquidity issues or whatever. And so what we set out to do with Hemi was take the architecture that allows Ethereum L2s to function very securely in the Ethereum ecosystem context, and then basically add in connectivity to Bitcoin in a way that was cohesive with everything already going on the Ethereum side. And so we took the best parts of Bitcoin, the best parts of Ethereum. We basically combined them together in a single protocol that speaks both languages. And so what that looks like from a more detailed perspective is Bitcoin security and Bitcoin assets and access to Bitcoin state, basically the ability for developers to build applications that observe activities on Bitcoin and respond to them, and combine that with the existing innovations and tooling that we have with the Ethereum virtual machine, the EVM, and also use Ethereum for DA or data availability, because that's one of the areas where Ethereum is really shining with high quality, uh, very secure and very well tested DA systems. And so combining those together, you get Hemi. And probably the most interesting part of what we're doing with Hemi on the Bitcoin side is what we call the HVM, or the Hemi virtual machine. And that's basically an EVM with a full Bitcoin node running inside of it. And so smart contracts, you can, on Ethereum, if you were to write a smart contract today, your smart contract could look at what another smart contract is doing. It could look at Uniswap pool and see what the current price is. It could look at an Oracle for some other off-chain data. It could look at a lending market and see how much is being borrowed in a particular asset, right? So you have this ability for contracts to see each other, talk to each other. But on the Bitcoin side, you don't have any of that. Bitcoin's, without going too much into the tech details, the way that Bitcoin's architecture works with something called the UTXO table is that everything that happens on Bitcoin happens in a very isolated environment. So even if you were to write a smart contract on Bitcoin using its very limited scripting language, you don't have the ability to look around on the rest of Bitcoin and see what else is happening. So like on Ethereum, you could say, hey, when this address receives 1 ETH, then release this collateral. But on Bitcoin, everything's very isolated, very self-contained, and so you don't have the ability to look at, in a Bitcoin script, to look at what else is happening on Bitcoin. And so with HVM, what we did is we embedded that fully indexed Bitcoin node in the EVM. So you can now write smart contracts that can directly observe what is happening on Bitcoin. So you could write a smart contract that says, hey, whenever this address receives Bitcoin, go and take this action on the EVM. Or you could say, only allow this user to do this thing as long as this UTXO on Bitcoin isn't spent. And so having that ability to look into and see what's happening on Bitcoin lets you build applications that are much more Bitcoin native. And so when you look at the current approaches to Bitcoin programmability, most of them center around take Bitcoin, wrap it in some way into an ERC20 asset, and then treat it just like any other ERC20. And there's a lot of validity to that approach, and there's a need in the space for that approach. But what often gets neglected is that ability to program more directly on Bitcoin, to observe what's happening on Bitcoin. And you can build versions of a lot of what we have in DeFi that is Bitcoin native. So the coins never have to be wrapped or bridged or whatever. You can interact with Bitcoin directly on the Bitcoin chain. You can observe Bitcoin directly on the Bitcoin chain. So you can build non-custodial DEXs, non-custodial lending protocols. You can even build like non-financial applications like a Bitcoin transaction accelerator that acts kind of like an MEV marketplace. And to build all those natively on Bitcoin, you need access to that data. And until HVM, there really wasn't a good way to get trustless, fully permissionless access to all of the data, everything that's happening on Bitcoin.
Okay. I mean, I get it from a logical standpoint, and I think the value prop sounds really good. But can you tell me a bit more about how this works in terms of, for example, I'm curious about the security assumptions there and how safe that is, but also maybe perhaps first, you said you don't have to wrap Bitcoin then to do things on the EVM side. But then you probably have to lock the Bitcoin first on the Bitcoin protocol, or otherwise it goes somewhere else. And you know what I mean?
So there's two models to Bitcoin programmability, and we're trying to do the best version of both of those. So the first version is you send Bitcoin into some sort of custodianship system, and you mint a ERC20 representation of that on the L2, in this case on Hemi. and then you can use that as an ERC20 in protocols, just the way you use wrapped Bitcoin or whatever on Ethereum. And although the trust model behind it compared to wrapped Bitcoin's very, very different, well, I'll circle back to that in a second. And then the second version is interacting with Bitcoin directly with HVM with that knowledge of Bitcoin state. So, for example, you could build say a non-custodial Bitcoin DEX where basically people post orders of, I want to trade 20 Ethereum for 1 Bitcoin, and they post that order to a smart contract on Hemi. And then somebody who has that 1 Bitcoin who wants to make that trade agrees on chain that they want to execute that trade at that price. And then the protocol can observe Bitcoin, see that the holder of Bitcoin sent that 1 Bitcoin to the recipient on chain, and it got confirmed to Bitcoin, and then it releases the 20 ETH as collateral. So in that sort of a system, the Bitcoin never left custodianship of the rightful owner. It was owned by the person agreeing to the trade, and then it was transferred directly from that person to the counterparty they're trading with. There was no middleman, there was no escrow system, there was no federation of signers in some multi-sig or anything like that. So those are the two models, and it's our hope that people start building, for protocols where it makes sense, they start building that second version of that, where it's observing actions on Bitcoin, incentivizing actions on Bitcoin, and you can construct those protocols in a way that is completely trustless. And then from the security or trustworthiness of the data, basically it's the same trustlessness as your smart contract trusting any other data in the EVM. So as part of Hemi state transition, that Bitcoin full node is running completely deterministically based on the protocol's instructions. And so there's no way for that data to be manipulated. There's no oracle that's relaying it. There's no third party who has to relay some data, or else information that should be on chain doesn't get on chain. It is a completely autonomous Bitcoin node running directly inside the EVM. All of the Bitcoin validation logic, all the Bitcoin fork resolution logic is all implemented in that full node. And so you can trust the data in there just like you could trust your contract reading from a Uniswap contract on Ethereum. Circling back to that first model where you bridge over the coins, or in our ecosystem, we call it tunneling. And we call it tunneling because we're connected to both Bitcoin and Ethereum. And so the idea is you can tunnel Bitcoin through the Hemi network to Ethereum. And so it's not just a destination, but it is a more broad way of transferring assets around. But the way that system currently works is it's a decentralized, over-collateralized custodianship system. So anyone can come in and spin up a vault on behalf of the protocol, and they'd go and they'd post, say, $1 million of USDC or ETH or whatever as collateral, and then they would run a vault that receives Bitcoin. They custody it on behalf of the protocol. People can deposit to that. They can withdraw from it. And if they misbehave, we use HVM to observe that misbehavior on Bitcoin, and then that vault would be liquidated, and the collateral will be used to repurchase the Bitcoin that was stolen out of the system. And so, in effect, that it's a economic guarantee that's automatically enforced by this system built on top of HVM that has that Bitcoin observability, that makes sure that the amount of Hemi BTC on the network is always backed by BTC that can be redeemed from these decentralized vaults. And that if anyone does do an unauthorized transaction from a vault, that collateral acts as sufficient capital to basically make the system solvent. And the second version that we're working on, which will be the true trustless or near trustless version, is something based on BitVM. So I'm sure you've heard a lot of people talking about BitVM and different approaches to, or different variants of BitVM that serve different use cases. And one of the BitVM is an amazing protocol, specifically BitVM2. And to kind of go through the history of that, you had Robin Linus, who originally proposed BitVM as I don't want to say thought experiment, but it wasn't a usable protocol. It was more just a demonstration that you could theoretically run anything on Bitcoin, given your willingness to pay enough fees, and maybe take 3 to 6 months for this back and forth, interactive process between multiple users challenging each other and stepping through a program. And then there was another kind of iteration on BitVM that was still called BitVM, so it's a little confusing, but it was basically emulating a processor. And so it was an easier way, instead of having to actually write your program in Bitcoin script and break it up in this weird way, you would instead be able to, compile your program, whatever you wanted to be validated on chain. You could compile that to a known language or a known instruction set like RISC-V or whatever, and then run it in this like virtualized CPU. But the problem was it could still take 3 to 6 months for this back and forth challenge process. In the event that somebody lied in the system, it was very expensive. And then BitVM2 was introduced as a concept a little less than a year ago. And the main innovation there was stepping away from the general computation, trying to let anyone compute anything on Bitcoin, and instead focusing on only what's needed for very secure bridge designs. And so with that BitVM2, it basically reworked, without getting too into the tech details, the way that the system worked. What was being validated was actually a ZK proof, so you could theoretically use it for, once you have the ability to validate a ZK proof, you can essentially validate any computable function. But it was the game theory of it, the setup of the different ways that UTXOs are constructed to make the system operate, was done specifically in the context of running a decentralized bridge. And so with BitVM, you basically have this system where you can have 100 or 1,000 participants who all collectively generate this graph, basically, of Bitcoin UTXOs that, in order for somebody to eventually withdraw Bitcoin from the system, they would have to provide a ZK proof that they correctly fronted liquidity to facilitate the withdrawal. And so, sorry, getting a little into the details here, but basically, the security of a BitVM-based system should be only needing one honest participant in that group of 100 or group of 1,000, or it can be even larger theoretically. And so, and the idea is also that people who have stake in the protocol could be participants in that system. And so if you had, you own Bitcoin that's tunneled over through a BitVM vault system, well, maybe you'd want to be one of the participants in all of the BitVM vaults, so you know that as long as you never steal from yourself, nobody else can either. And so there's one open problem with the current BitVM2 design, though, and that is because of Bitcoin's lack of self-introspection, there's there's not the way for the Bitcoin scripts that actually do run on Bitcoin that make BitVM work. There's no way for those scripts to validate certain things about Bitcoin that they need to validate. And so they worked around this with an approach that they call superblock light client emulation. Without going into the details, there's ways for miners to manipulate that and basically do ransom attacks on the protocol. And so the design that we're working on, that's BitVM based, uses Hemi as this external observer of Bitcoin consensus, which it can do in a decentralized way with basically the full censorship resistance of the Ethereum chain. And we can get into the details if you want to, but basically, as long as nobody is able to actively censor Ethereum, Hemi will always have a updated, correct view of Bitcoin consensus. And so given that external observer, you can basically reflect that back into Bitcoin in a way and bypass that workaround for Bitcoin introspection. So in a weird way, the fact that HVM makes Bitcoin data available in an EVM actually turns into a way to make Bitcoin data available to Bitcoin itself in Bitcoin script. So it's a fairly convoluted system, but basically that's the end goal of that will basically be a one of n trust model, very scalable Bitcoin custodianship system that's based purely on cryptography, math, and solid game theory versus needing to trust any single person to control a private key in a system.
Wow. Okay, that's a lot. So,
Sorry.
no, all good, all good. It's interesting, but it almost sounds like there's a lot of hacking around the Bitcoin design, the Bitcoin network design, finding ways to extend it without adding too many new trust assumptions and centralized ways to do that, which would add centralization and risk, which would be going against, which would kind of defeat the purpose, I guess.
Yeah, exactly. Bitcoin's lack of features is it's a curse and a blessing because, like I was saying earlier, if you're rarely making changes to the protocol and there are always very controlled, specific changes that don't affect the other parts of the system or things that are already working, there's a certain peace of mind in that. But it also means that you don't get new features added very often that would be needed to build, the best versions of some of these systems that are possible. And so, with Ethereum, it's very easy to, whatever L2 settlement design you can dream up, you could implement on Ethereum. On Bitcoin, you have to find these really weird, convoluted workarounds that, historically it went from, okay, well, we'll trust a federation of, 5 people to control a multi-sig, and everyone just puts their Bitcoin there, and we issue them a bearer bond, and yeah, that's good enough. And now the irony of that is Bitcoin's the most secure decentralized asset. But then as soon as you bring it into DeFi, whether that be through something, a wrapped Bitcoin type model or a federated multisig or whatever, it turns from the most secure asset in the entire blockchain ecosystem to pretty much the least secure asset.
Why is that? Because you put Bitcoin in this like honeypot on the Bitcoin chain for that other smart contract on Ethereum to mint those wrapped assets, and then that honeypot gets hacked and Bitcoin gets drained, that sort of thing. And you're trusting that one actor as well.
Yeah, so you're with the old model, you're always trusting some custodianship somewhere, right? And there's ways that, like with our V1 design of our Bitcoin tunneling system, there's ways you can make that better by having, over collateralization and the protocol being able to, have collateral to liquidate to make the system solvent. And so that's call it a V1.5 approach.
Sorry, is that similar to? Do you know Interlay?
Is that threshold Bitcoin?
It is a parachain on Polkadot. And I think you could also create these over collateralized pools to kind of like bridge Bitcoin. It sounds similar to me, but
It could be similar. I'm not familiar with their approach. I will say some of the design elements are similar. If people are familiar with threshold Bitcoin, they manage it in a lot different of a way. So in our model, anyone can come, put up collateral, and be a custodian. So you get this uh, more decentralized, more distributed version of custodianship where there's not one single group of people to compromise that would compromise the entire protocol. You have the segregation, so you could have 1,000 users running vaults, and if one of them gets hacked, well, their collateral is used to liquidate it. It sucks for them, but that was a small amount of Bitcoin that was custodied by the overall protocol versus an approach like threshold Bitcoin that does still have over collateralization. There's a sort of an all or nothing approach where if there is a group of multi-sig participants and they're rotated frequently, but basically if at any point the majority of them were compromised, that's the entire protocol being compromised. So it's the same logical setup, but it's all your eggs in one basket versus
more broken up.
Yeah, versus being broken up. But yeah, so the first approach was you trust somebody to hold your Bitcoin, and there's no economic collateralization. So you say, hey, that guy looks trustworthy. Here's my Bitcoin. He's going to issue me an ERC20, and when I come back in a year with that ERC20, he pinky promises he'll give me my Bitcoin back, right? Then the next model is this over collateralized version. There's multiple different ways to design that kind of a system, and then the ultimate version is that BitVM based design where you're not trusting anyone. You're trusting that out of a group of 1,000 people, one of them is being honest, and if you really care, you can be one of those 1,000 people. And so that custodianship model, it's a very convoluted workaround to Bitcoin's limitations. Implementing a similar kind of settlement system on Ethereum is a solved problem and has been working in production for 3-4 years now. But just given Bitcoin's architectural limitations, you have to figure out these really strange workarounds and ways to massage the limited functionality of Bitcoin in some way into doing something that it was not designed to do. And so in the future, we could easily see, 10 years from now, maybe Bitcoin adds an opcode to validate ZK proofs, and that would make things way easier. Maybe they add opcat, which makes it a lot easier to build much smaller scripts that do the same functionality, and there's some new functionality that you can do with it. But the reality is, like, by the time those changes get deployed to Bitcoin, if they ever do, it could be 2, 3, 5, 10 years from now. And so we wanted to design Hemi around what can we build that we know works with Bitcoin today. And then if any of those features get added, great, then we can utilize those and build maybe simpler versions of some of these systems in the future.
Yeah, okay, that makes sense. But like, how do you inherit security from? You have to dive into that a bit more. Is it just from Bitcoin or from Bitcoin and Ethereum? And how does that happen? I'm not fully getting it, and I'm almost afraid to ask because it might get too technical. But
I'll try to keep this one high level.
no, it's okay. But because like, are you like an optimistic rollup? Do you settle on Ethereum, and do you do dispute settlement on Ethereum, or like, what's the exact mechanism here?
Yeah, good question. So the fundamentally, Hemi is optimism DNA. So we basically took the optimism stack as it works on Ethereum and then just added Bitcoin into it. And so what that means is two major things that we did to add Bitcoin. The first is Bitcoin security, and then the second is that HVM system or that embedded Bitcoin full node. So the way the Bitcoin security works is basically it's through a protocol we call proof of proof or POP, and it's a decentralized incentive system for people to take information, basically state proofs of the Hemi chain, and publish those to Bitcoin. And then if there were to be a reorganization proposed to the Hemi chain, the fork resolution protocol would use those publications in Bitcoin to decide what's the canonical chain. So, for example, taking this outside the L2 context, if you had, like Litecoin and Dogecoin merge mines with Litecoin, right? And so if you were to implement POP over there, what it looked like is instead of merge mining, you would have a decentralized group of participants that anyone, just like Bitcoin mining, anyone can buy an ASIC and spin it up. With POP, anyone who has Bitcoin in their wallet could go and publish state proofs to the Bitcoin chain. So, if, Dogecoin, if it adopted proof of proof, for example, would basically have this group of users who are publishing headers of the Dogecoin chain. So it'd still have its own native consensus protocol like proof of work or whatever, but then they'd be publishing those proofs to, in their case, Litecoin. And then if somebody spun up a bunch of mining power and created an alternate fork of the Dogecoin chain trying to do a reorg, when they propose that reorg to the network, all the daemons on the network would recognize, okay, there's a reorg. Now let's analyze the publications of the current chain versus this proposed reorg in Litecoin. So if this chain, and I'm simplifying a little bit here, there's some complexity and nuance in some things that are smooth, and you have multiple different blocks in which a proof could be published because you need to allow for some variability in block times and publication times or whatever. But in summary, basically, the protocol would say, okay, this chain, chain A was published to Litecoin 2 hours ago, and chain B was published to Litecoin 1 hour ago. So we're going to go with the one that was published earlier. And so using that as your fork resolution mechanism basically means once you get publications of a security inheriting chain in the security providing chain, then you are able to, after a period of time, know that it's mathematically impossible for that fork resolution protocol to choose any other chain than this current chain that we're looking at, because there's been no valid proofs of an alternate chain published within that timeout delay that they need to be published to, say, Bitcoin, in order for that fork of the chain to be accepted as a potential candidate by the fork resolution protocol. And so the end result of that is you get Bitcoin finality. And so the way that works on Hemi is basically people publish what are effectively block headers of the Hemi network. It's a little different, but effectively they post these summaries of the current state of the Hemi network every 5 minutes. They publish those to Bitcoin, and then those get confirmed in Bitcoin transactions. And then if there was ever a challenge to the Hemi chain, somebody ever proposed a reorg, then the fork resolution protocol would look at the publications of the current Hemi chain in Bitcoin, compare it to that proposed reorg, and only if that proposed reorg was published to Bitcoin earlier, a little bit of a simplification, but if it was published earlier, would it actually accept and reorg over to that fork. And the important part there is that all of that's visible publicly on Bitcoin. So you can look purely at the current data in the Bitcoin chain and determine what the correct version of the Hemi chain is from a consensus perspective.
What's posted to Bitcoin exactly?
It's pretty close to a block header, so it has basically we modified the block header format a little bit to have this kind of braided reference pattern. And so blocks don't normally, a Bitcoin block or an Ethereum block, it only references the one previous block that came before it, and that's how you construct the chain. Is each block references the one that it built on top of. So we modified the header structure a little bit. So now each block not only references the previous block, but it also references a further in the past block that we call a keystone. And it's those keystones that actually get published, because that braided reference pattern basically means if you publish this, if you publish every keystone, that gives you a summary of the entire chain's geometry because of that braided reference pattern where block 100 references block 75. And so you don't need to publish block 75, 76, 77, so on and so forth. You can just publish each of those keystones and you'll know, okay, keystone 100 built on keystone 75. If those two are published to Bitcoin, then from the information contained in those headers, we can connect those two blocks together as part of the same fork of a chain. And so what's published is basically a block header that contains a state root. And so that's basically a cryptographic fingerprint of the entire state of the EVM state machine. And so like all the smart contracts, all the storage, all the mutations to that EVM state that transactions have made, that state root plus that positioning data of the previous block, the previous keystone, in our case being an L2, the L1 block that this L2 block was derived from or based off of, that all gets put together in this serialized data format that basically says, here's where the block is in the chain, and here is the state of the chain, the state of the EVM that that block represents at that point in time on the Hemi chain. So it's a small bit of data. It's I think 73 bytes.
Yeah, but what about all the wallet balances? Is that all then? Can that all be found on the Bitcoin chain from these postings that you're doing to Bitcoin in case Hemi gets attacked, like you say?
Yeah, good question. So this gets into the difference between consensus security and DA, or data availability.
Yeah. How do you go about DA?
So DA is done on Ethereum, and so it's a hybrid model combining the two networks together. So basically, Bitcoin, we publish just enough information to track the correct consensus of the Hemi chain, but not its contents to Bitcoin. And then we post the actual contents to Ethereum. And so the way that this works in practice is if somebody were to propose a fork to the Hemi chain, they would have to publish it to Ethereum DA. And then now that it's on Ethereum DA, the fork resolution protocol would look at the publications of the current chain versus that alternate chain that both exist in Ethereum DA and compare their publications on Bitcoin to decide which chain to accept. So Ethereum is for the actual data storage. So if you
something like you can compare like the hash of the state to the like on Bitcoin that you've posted to what the if you hash whatever is on Ethereum is equal, something like that.
Yep, exactly. So it's a the nuance there would be the data on Ethereum is basically the blocks of the Hemi chain, and then the data published to Bitcoin is the headers of those blocks, in a sense. And so basically, the protocol pulls the data that's published to Ethereum, uses that to construct the actual blocks that could be part of the protocol, and then looks at those blocks and says, okay, which ones are published to Bitcoin, and how do they, if there's competing blocks published to DA, how do their summary publications, if you will, their publications of the fingerprints of those blocks, how do those compare in relative publication timeliness on Bitcoin? So using Bitcoin, you can use Bitcoin directly for DA, but there's two problems to that. The first is a selfish problem of it's very expensive, and you're beholden to Bitcoin's 10-minute block time. And the way in which you have to publish data to Bitcoin, large amounts of data to Bitcoin, is you have to use or basically abuse TapScript in kind of the same way that ordinals did to get. And I say abused as sort of jokingly, but it's an open protocol. You can use it however you want. But basically the same way that ordinals NFTs were done, where you have to commit to data and then reveal it. So you're basically committing to data that then you have to do a second transaction to reveal that data, and it's extremely expensive to do. And Bitcoin can't really scale to the needs of all the people building Bitcoin L2s on it. So, Bitcoin has 4 megabyte blocks every 10 minutes. And usually it's not even a full 4 megabytes because conditions have to be perfect for that to actually happen. And so all the world's blockchains who want to, build as Bitcoin L2s, they would all have to collectively fit into less than 4 megabytes every 10 minutes, which is undoable basically. And so unless Bitcoin were to change and add additional data storage abilities, which I don't think is even in the cards, you're never going to see true functioning Bitcoin DA at scale. Whereas on the Ethereum side, DA is something that they're leaning very heavily into. And so we separated out and said, okay, Bitcoin will be used for consensus security, deciding which chain is correct, but Ethereum will be used to store the actual data that you need to compute what that chain looks like and how the transactions in that chain behave.
Fascinating. This is really interesting.
And sorry for the deep dives here. Some of this it's hard to give high levels for some of these things.
Yeah, no, I know. I think I got most of it, so that's nice. I don't want to get too much bogged down into these details, so maybe just one more one more deep dive, and then I'd love to hear more about the traction and kind of where you're at in the roadmap. But who's doing those transactions to Bitcoin? Because like you incur those transaction fees and stuff, and plus it could be a centralization vector. Whoever is posting doing these things.
Yeah, that system is entirely permissionless. So basically, anyone can come in and take data from Hemi, basically those state summaries, those quasi headers, publish those to Bitcoin, and then collect a reward from the protocol. So basically, the Hemi protocol can see what happens on Bitcoin through HVM, so it can see those publications that people are making of the Hemi chain to Bitcoin, and then it pays them out. And right now, we're pre TGE, so it's in points, but post TG, it'll be directly in liquid tokens of the protocol, and so that subsidizes the users for the Bitcoin fees they're paying. And without getting too much into the mechanics, there's sort of a sweet spot of how many publications you want. So one publication theoretically is enough for security because publishing the same data multiple times really doesn't accomplish anything. But you do want some redundancy in case one of those users drops out, they run out of Bitcoin in their wallet, whatever, right? And so there's a sweet spot of 4 to 5 pop miners who are ideally unique individuals, although it could be the same person doing multiple publications from different wallets or whatever. But basically, the protocol will dynamically adjust the rewards that are paid out based on targeting that 4 to 5 publication sweet spot. And so if it sees I'm getting 20 publications per keystone, okay, we'll reduce the overall rewards we're paying out, and some of those people will leave, and we'll get down to 4 or 5. Okay, we only have 2 people doing the publications. We need to increase those rewards to attract more people, so we get to that sweet spot of redundancy. And so anyone can be a pop miner. We've had in mainnet so far, I want to say about 380 different addresses do some pop mining, and depending on when you check right now, there's between 5 to 7 active pop miners at a time. So it's a decentralized process. We could run a pop miner if we wanted to, but we would just be one of multiple community members basically running pop miners, because there's no need for permission in that system. It's however the data gets on Bitcoin, we don't really care about as long as it gets there. And so you can build a protocol that incentivizes anyone who wants to participate to go pay Bitcoin fees and publish this data to Bitcoin on behalf of the protocol.
What are the implications for scalability for your chain based on this setup that you have?
Yeah, good question. So that's one of the cool things about Pop is it not only can secure Hemi itself, but it can secure Hemi's entire future L3 ecosystem. And in doing that, the footprint of data on Bitcoin would not change at all. So basically, since what's getting published to Bitcoin is just these tiny proofs of the current state, you can summarize, you can summarize 100 terabytes of data in a single hash, right? And so with that same concept, Hemi is pop secured to Bitcoin itself. Other L3s could secure themselves to Hemi using the POP protocol. So they'd basically be paying fees in the Hemi token and then be collecting rewards from those L3's native tokens or whatever makes sense for each individual L3. And because Hemi is POP published to Bitcoin itself, all those other chains can inherit Bitcoin security through Hemi as sort of the security aggregation layer. And so we still only need, 400 bytes of data published to Bitcoin every 10 minutes, whether there's one transaction on Hemi or there's a million transactions on Hemi, whether it's just Hemi or whether it's a bunch of L3s that themselves secure to Hemi's own consensus. And so it scales very well in this, kind of tree of expanding security inheritance, if you will, where as long as there's one chain that's secure to Bitcoin, everyone else can secure through that without having to increase any of the data publication pressure on Bitcoin itself.
Okay, so you're also looking at becoming sort of like a multi-chain ecosystem in a way. It sounds a bit like Polkadot, Cosmos, with the shared security and having L3s connected to you.
Yeah, that's the long-term plan is basically build out Hemi as this foundational L2 that bridges the gap between Bitcoin and Ethereum, and then have L3s for any specific, uh, you know, whenever you design blockchains, you're always choosing trade-offs for a specific use case. So, if you want crazy transaction throughput, you're going to have to sacrifice on decentralization. If you want, crazy low transaction fees, maybe you can't use Ethereum for DA, right? And so there's all these different trade-offs you're making with your design that affect the cost, the speed, the security of the chain. And so you're never going to have one chain that solves all of those needs for everybody the way that they want it. So what we're trying to do is design Hemi with primarily a focus on security and the features needed to connect Bitcoin and Ethereum without any additional complicating frills. And then anything that people want to do that doesn't fit with what using the L2 directly supports from a fee, security, whatever perspective, the primary one's probably going to be throughput. Then that's where you see the L3s come in, where you could say, okay, we built this L3 for gaming, and yeah, it has a single centralized party running the sequencing, but they're able to produce blocks every 100 milliseconds, and everyone's just trading swords in a game that are worth $10. So there's not a lot of risk in that. Decentralization trade-off is acceptable. Or you could see a chain that says, hey, we need more native acceleration of different opcodes that support on-chain AI computations. We need, basically like the NVIDIA, you have the tensor cores in the GPU, we need that in an EVM. And so that's something that they could then build as an L3. And so all of these different L3s can optimize for different trade-offs in security, cost, speed. They can optimize for different feature sets, but they'd all be connected to Hemi, which means they'd still be effectively connected to Bitcoin and Ethereum, and they'd still have access to all of the assets tunneled over from those two networks. And they would also be able to inherit Bitcoin security through Hemi as the security aggregation layer.
What's Hemi used for then?
A lot of things.
Sorry, the Hemi token, not the network.
Hemi token. So it's going to be a gradual process of introducing new functionality. So the long-term goal is it will be obviously the easy ones used for governance. It's going to be used as the native fee token of the network, or one of the native fee tokens. So you'll still be able to pay fees in Ethereum, but they'll get converted to Hemi tokens before being paid out to the sequencer. And so you basically get a discount by paying for those fees in Hemi tokens. It's going to be used in what we're building. The code name for now is a converged staking system, where you stake your assets once and then can opt into different parts of the Hemi protocol that you want to participate in, and then receive rewards for. So it could be, the bare minimum is you stake and you participate in governance. But beyond that, it'll be in the future when we decentralize the sequencer and the batcher, it'll be if you stake enough, you can be a sequencer on the network and produce blocks. You can be a batcher who does DA publications to Ethereum. And then the super long-term goal is that converged staking system includes a shared sequencing, shared DA system that supports the L3 ecosystem. So it'd be you're getting rewards for running the Hemi protocol, but you're also getting rewards for running this other shared sequencing, shared DA system that benefits all of Hemi's L3s and drives revenue basically from the utility that those L3s are creating.
Like restaking.
Yeah, very similar to restaking. It's you can think of it as like restaking baked into the protocol layer. So like imagine if you could stake your Ethereum in EigenLayer directly, and that let you be a sequencer on Ethereum, kind of in that model. So it's a protocol native restaking type of a system. And then it's also going to be used for providing cross-chain liquidity. So for example, part of the BitVM tunnel design basically means that deposits and withdrawals should be large and infrequent, which obviously doesn't facilitate the average user bringing over $100 worth of Bitcoin to go trade perps for 2 days before they exit back and want their Bitcoin back, right? And so that BitVM system needs basically a liquidity wrapper around it, where some people hold native Bitcoin, some people hold Hemi Bitcoin, some people hold both, whatever. And as people want to onboard or offboard, they are providing that liquidity in a trustless manner, where it's the protocol sees that the liquidity provider delivered the native Bitcoin and then releases your collateral, or if they don't do it, releases your Hemi BTC back to you and you can withdraw from somebody else. So basically that liquidity wrapper system for the tunnel, that's going to also be based on Hemi staking. And there's probably a few other things in the protocol in the future. There's some work around the ZK provability of the network that'll probably have a component where the Hemi token plays into that. But that's a little less economically baked than some of those other items.
Fascinating. There's a lot of use cases or utilities. What have you achieved thus far, and what's next?
We launched mainnet in mid-March, so we've been in mainnet for about 2 months. We've gotten to a little over a billion in TVL, I think 1.2 billion, and we've got over 30 on-chain protocols deployed, and I think we're partnered with around 70 at this point. And so we have multiple DEXs, lending protocols, multiple Oracle providers. Some people are building some interesting games. There's some meme tokens. So a lot of different things happening on Hemi. The next step for adoption is going to be getting people to build those more Bitcoin native applications. So building a non-custodial Bitcoin DEX, non-custodial lending protocol, et cetera. And so the next stage of kind of attracting developers, dApps protocols is going to be, that outreach, that developer education around here's what HVM is, here's some, toy examples of different, minimal versions of some of these protocols. Here's some, tech details on how they would be best implemented with HVM. How would you translate Aave to be a Bitcoin native application? How would you translate Uniswap to be a Bitcoin native application? And so getting that developer education out there, so people who do want to build these more Bitcoin native apps that are really only possible on Hemi, getting them kicked off, them starting to think about designs, starting to play around with deploying different versions of those protocols adapted for Bitcoin nativeness. As to where we are in sort of a development roadmap perspective, so launched mainnet 2 months ago, so that's kind of V1 of the Hemi protocol. So that has a version of HVM called Phase 0, which basically means you can get to Bitcoin transactions, Bitcoin headers, and you can look at the full Bitcoin UTXO table. So it's pretty much all of the things happening on Bitcoin natively that you would ever want to look at. Then future phases of that, we are going to add support for meta protocols. So things like ordinals, runes, BRC20s, those are protocols that are built on top of Bitcoin directly. And the way that they do that is you can think of those as sort of a different lens through which you view Bitcoin information. So, the Bitcoin protocol has no idea ordinals exist. But when you look at the data on Bitcoin through a certain lens, then you see the ordinals protocol come out of that. And so future versions of HVM will have support for those meta protocol indexers. We have the V1 of the Bitcoin tunnel, which is that distributed over collateralized vault system deployed. And we're working on the V2 of that, which is that modified BitVM based design. We're also working on, because with BitVM, we have to make the entire Hemi network ZK provable anyway. So once we do that, we're going to update the Ethereum settlement side to be ZK based, possibly with a fallback to optimistic. And then the other major work stream is decentralizing the sequencer. So basically, right now, it's a centralized sequencer like a lot of L2s are. But the fact that we have Bitcoin security inheritance means that we can decentralize the protocol with a consensus protocol like Ethereum's style of proof of stake versus the more centralized versions you see in like delegated proof of stake systems or the quote unquote BFT style designs. And so with that Bitcoin security, we can safely implement the Ethereum style proof of stake where you can have 10,000, 100,000, a million individual active validators and do so in a way that's still secure even on an L2. And so that's the next sort of development item on the roadmap on the consensus protocol side.
Okay. What's behind the TVL? What are behind these 1.2 billion?
Yeah, it's a mix of a couple different things. So we have a very bare bones Hemi staking system right now. It's basically just a place you can park assets, and then in the future that'll be upgraded to that converged staking system. And so I don't have the numbers in front of me. There's a lot of TVL that's sitting in that protocol. There's a lot of TVL in, I believe, some of the lending protocols, some of the DEXs. So I don't have a great answer on that because that's not something I spend too much time on. I'm more, protocol development. But
what assets, like, for example?
Primarily Bitcoin, mostly the Bitcoin LSTs and LRTs. So one of the kind of macro directions of the Hemi project is we want to be the grand central station where all these different types of Bitcoin come together, whether that's Bitcoin from a Bitcoin restaking protocol, whether that's Bitcoin from obviously our own tunneling system, or Bitcoin some of the more traditional Bitcoin variants on Ethereum. We want to be the crossroads where all of those can meet. You can do things with all of them. You have a lot of liquidity in all those assets to do things with. So a lot of, I think, I want to say 95% plus of the TVL right now is a mix of 10-ish different Bitcoin LSTs and LRTs.
Okay. I mean, I think there's loads to still get into, but we are already talking for an hour now.
Yeah, geez, that went quick.
Yeah, I know it went by quick. No, I also like the fact, or I was interested. There were some mentions of AI use cases in ZKML. Perhaps we can take this one and then and then we'll wrap it. What are you doing in terms of AI, and or what are projects doing with your protocol in terms of AI?
The ZKML thing was more of an aspirational, like, here's a cool use case of Hemi's basically Bitcoin publication would be to use that to Bitcoin authenticate models that, so with an AI model, you have the model itself, you have, all of the weights of the model, and then you have, well, how was it trained? What was the input data? Okay, that produced this model. And then whenever you run inference on that model, you're doing a bunch of computations that you should be able to line up with the actual weights of the model and reproduce. And so the idea with the whole ZKML thing was, if you had trained, say, a proprietary model, you created the best, the best image generator possible. Maybe not the best example, but you created some unique machine learning model that you want to keep private, but you want the public to be able to use and to be able to trust. So there's two parts to ZKML, and one of them's a lot closer than the other. The part that's close, and I'd say probably in the next 2 or 3 years, my personal guess is we'll see it being used in production and non-toy examples, is zero knowledge proved inference against model. So the model's already trained. That's the really, when you hear about ChatGPT, spending billions of dollars to train their AI, billions of dollars to run their AI. Most of that is the training of that model, right? That's the really expensive part. And then inference is still expensive, still computationally intensive, but not nearly on the scale of the training. And so I don't think ZK proving for AI training is going to be here anytime soon. I think that's, take what AI had to do to, OpenAI had to do to train ChatGPT 4 and multiply the computational overhead by 10,000 and see where that gets you.
Sorry to jump in just because to get the thought in. But even for inference, if you have like a large language model to create like a ZK circuit of the whole thing, seems to be still a bit out.
It certainly, we're not there yet, but I think that's closer. And I don't think you're going to see, it's going to be in stages, like the small kind of toy models that you can run on a home computer easily. Those conceivably today could be run with ZK proofs for inference on, decent consumer hardware. And I think, and I'm not an expert in this area. This has just been I find it fascinating. I've poked around, done some research, but consensus protocols all day. This I'm not 100% informed on, but there's been some advancements with the way that you structure the language model and certain variants of ways that you can set up how the language models architected that lend themselves much more to ZK provability. Also, the other big thing in ZK just in general is right now, pretty much everybody who's calculating ZK proofs, they're doing it on GPUs. And there's several companies working on ASICs that accelerate the really, really heavy, complicated parts of the ZK protocols that consume most of the GPU time. And I think between some of the improvements that people are making on the ZK front with the algorithms themselves and the hardware side, I think we'll probably see, I would bet within 5 years, ZK proving will be 100 times cheaper than it is today. Combination of hardware and some algorithm development. I could be off. Maybe I'm being a little optimistic, but I think within 5 years, I'd be surprised if you couldn't ZK prove even a moderate AI model inference. Now, the other thing is with everything getting faster, people are going to build bigger and bigger and bigger models, and so there's going to be the race of the models are growing bigger while we're ZK proving faster, and
Yeah. You might still be behind in terms of like the models that are then in general use, which are much larger as well.
Yep, yeah, exactly. So we'll see how that race plays out, but The reason I brought it up in the Hemi white paper, the context was you can take a model and basically publish a cryptographic hash of all the weights of that model, and then if you publish that to Hemi, then it by extension gets published to Bitcoin because of proof of proof. So you basically have a model that's timestamped to Bitcoin at a point in time, and then if you have ZKML, you can prove that inference that was run against that model was actually run against the correct model and the same model that was timestamped to Bitcoin. And so you can orchestrate all that together.
Right, that is a cool use case.
It's cool, and it's probably a ways out, but it's a neat way to combine Bitcoin security with building trust in AI systems, basically.
Yeah, you'd have as an you'd put the ZK proof on chain, and also you'd have as one of the outputs, I guess, the hash of the weights, right?
Yep. Yeah. You basically put all the weights together in a giant Merkle tree, take that root, stick it on chain, and then your ZKML it would first verify that the model lines up with that original hash you posted, and then run the inference against it.
Yeah, we're doing some similar work there in terms of we're using trusted execution environments for inference to solve sort of the problem in terms of privacy and verifiability for running AI inference. So in a way, a hardware solution. And then we use ZK for the attestation reports that the TEs generate. So to verify the attestation reports, because that is still quite. You have some computational overhead to do that on chain. Plus, you'd have to put, I guess, the certificate chain and stuff of the manufacturer on chain, and ZK proof seems elegant in that case to run the verifier code in a ZK VM, and then to put the proof on chain. The proof can be verified on chain, and then also to put alongside with it a hash of the code that was run in the enclave, which you can then check on chain against like an approved registry of code bases, and to perhaps also assign in the attestation report like a public key that then can be the identity going forward for that GPU. Because then it's kind of like bound to the TEE. It's signed in the attestation report. And then going forward, that public key, which would be compatible with the chain, can be used to, for example, commit certain commit inference receipts, like the input output hash of an inference or something like that.
Yeah, that could be interesting, kind of a hybrid. So it's not the full ZK proving of the actual inference, but because that's computationally feasible right now, but you're ZK proving an attestation from a trusted execution environment where the actual inference happens. So it's a much better than any other way of practical AI inference proving that you can afford to do today.
Yeah. Oh, it means a lot you're saying that. Glad you like it. Working heavily on this at the moment, and we're partnered with Midnight. I don't know if you know them, Cardano partner chain. And they're focused on privacy and ZK. We got a grant from them, and yeah, but it's exciting.
Awesome. Yeah, not terribly familiar with Midnight, but some of the just general advancements in ZK across the space are interesting. It's kind of cool because ZK would not have like ZK has been around since the 80s, but nobody really cared until blockchain finally gave us like not only a useful way to use it, but a useful way to monetize it and like fund the research and development. So it's been cool to see. Like you look even back at and I'm by no means a ZK expert on the cryptography side. I'm a practical engineer, using it in systems. But it's amazing to see the development of what's been possible with ZK proving from you go back to like the early days of Zcash and like all the custom work and insanity they had to do crafting custom circuits for every part of their protocol, and then you fast forward to now and it's like, well, does your code compile to RISC-V? Okay, you're good, right? It's not exactly that easy yet, but it's amazing the advancements we've seen both on the algorithmic side itself, but also just adoption tooling, making it accessible, which is really exciting.
Yeah, super exciting, super fascinating at the moment. Oh yeah, by the way, the project is called Oda AI. Seems weird to not mention the name and just talk about what we're doing. No, but yeah, that was amazing, Max. Would love to chat sometime soon. Honestly, again, just uh, was very stimulating chat, and I'll definitely look into Hemi a bit more. And yeah, we'll put all those links in the show notes as well to your docs and to your website and how people can get involved. And all the best on the roadmap.
Awesome. Really appreciate it. Had a great time chatting with you too, and would love to do this again.